everyone. Thank you so much for joining me. My name is Kay Thompson, and this is A Lesson in Real Estate. Today's lesson is one that I believe is coming at a great time for a lot of people as they contemplate whether or not to move during the new year. Often people are optimistic at this time of year because they are, looking forward to getting their taxes to either, continue to rent the home that they're in. They're looking to maybe purchase or rent a new home or purchase a home. For the purposes of today's lesson, we will discuss the most common home loan types that exist in our country and what the general qualifications to obtain these loans are. Now, we often hear the terms FHA and conventional loan, but we don't often hear what the terms actually mean. I would like to break these terms down for you as it is the first step in really understanding how they work. As usual, for the purposes of giving you solid information that you can go and look up for yourself after the broadcast, you can go to this wonderful website that has a plethora of great information on it about mortgage financing and definitions and things of that nature. And I'm using the definitions from this site at this point because I believe that they give the most simplest explanations as to what these terms are. And that website is www.freeandclear.com. So let's start with the term conventional home loan. What is a conventional home loan? A conventional home loan, simply put, is one that is not backed by the U.S. government. It's not backed or insured by the U.S. government. And a non-conventional home loan is one that is backed by the U.S. government, more specifically FHA, VA, USDA, and HUD. They are the major issuers and insurers of non-conventional loans. There are different types of both conventional and non-conventional loans. Each loan has different qualification requirements, obviously. And while we don't have enough time to go through each tenet of every loan type, I can share with you some of the basic components and requirements of each loan type so that you can better understand, what you're getting when you're purchasing your home. Now, the first type of conventional home loan is simply called a conforming mortgage. These home loans are available to purchase single-family residences and multifamily properties that have up to 4 units, so 1 through 4 units. The loan amount limits in the 48 contiguous states for this type of loan is $548,250 this year. So what this means is that a person could borrow up to, but no more than, $548,250 to obtain a conventional home loan to purchase a home. Now, when I say 48 contiguous states, for those of you who may not know what that means, contiguous means the 48 states that are connected, so the mainland of the United States. It does not include Alaska, Hawaii, Guam, or the U.S. Virgin Islands, which are 2 territories that these loans are also available in. Now, for those particular states, Hawaii, Alaska, Guam, and the U.S. Virgin Islands, they have a different loan amount limit, and that is $822,375. So if you live in Alaska, Hawaii, Guam, or the U.S. Virgin Islands, at this time, the loan limit amount for a conventional home loan is $822,375. I do want to put a little caveat in here that these loan limits do change. They do change often. This is what the loan limits are at this particular time. So I would urge you to speak with a loan officer or a real estate professional, or go to any of the sites that I'm going to mention throughout the program to figure out if and when the loan limits change. But they do change often. These are, at this particular time, what the loan limits are for this particular loan. Now, let's just say you have a home that you want to purchase that exceeds those loan limits. If you need a home loan that exceeds the limits, there is an option for you, and it is called the Jumbo Conforming Mortgage Loan. While these loans exceed the loan limits that I just mentioned earlier, they cannot be more than the loan limits that are set by the counties in which the property is in that you want to buy. They have these upper loan amounts because the housing costs are higher in those areas that may be higher in those areas. But your jumbo conforming loans still cannot exceed the loan limits that are set by the individual counties, as specifically the ones that you want to, purchase your home in. You still have to be within those limits. Also, I would like to point out that with the jumbo conforming mortgage loans, the option for down payment assistance on those is very little, and you probably won't get that. So if you're looking to, purchase one of those, a home that exceeds the loan limits, you want to have as much money as possible to close, because you will probably not be able to take advantage of any local down payment assistance programs that may be available in your area. So I do want to point that out. There are other types of loan in this category, such as the non-conforming jumbo mortgage, and basically that's a loan that actually exceeds the loan limits in your county. So it's non-conforming simply because it's a loan that you're getting that exceeds the loan limits in your county, and it is actually typically used by people that have, exceptional financing capabilities. And then the other one is the non-owner occupied mortgage, which is a mortgage that is mostly used by investors to purchase homes for rentals that they can use, to rent out to people. They each have different terms and conditions that you can learn about by going to sites such as FHFA.gov or HUD.gov. You can also check them out on FHA.gov and freeandclear.com as well. Okay, so next we're going to discuss the non-conforming home loans, or those home loans that are backed by government entities such as FHA, VA, and USDA. These loans are developed for helping families with low income or moderate incomes to obtain the dream of home ownership. These programs often have low down payment requirements, but on the other hand, they do require the buyer to pay more upfront costs to be able to secure the loan. FHA loans is one of the most commonly used loans. The FHA loan will give qualified home buyers up to 96.5% of the purchase price of their home, as long as they're also able to meet the other guidelines that are set up in the loan program. Say for instance, you have to have you have to beat a certain debt to income ratio threshold. You have to have, a credit score, a minimum credit score, which we'll talk about later. And then there are other things that go along with it. The program allows for lower credit scores, say like a 500, if you have adequate down payment. As long as, or also I should say, with FHA loans, there is a mortgage insurance premium that buyers must pay for upfront, a portion, and then as well as the mortgage insurance premium is baked into their monthly mortgage payment, and they are responsible for taking care of that cost throughout the life of the loan. The next two loan types, which are USDA and VA loans, they work a little bit differently than the FHA loan. The USDA loan is the one that is offered by the U.S. Department of Agriculture. This loan is available to low and moderate income families that want to live in rural areas, agricultural areas, or very small communities. This loan has no down payment requirements, so you don't have to put any money down. It's 100% financing. However, there are upfront fees and mortgage insurance fees known as guarantee fees that are associated with the program that you would probably be responsible for. And the best way to know is specifically what fees you would be responsible for up front would be to speak to a qualified loan counselor or loan officer who can help guide you through that process. The VA loan is backed by the Veterans Administration, so obviously you have to be a veteran in order to take advantage of this. As previously noted, it is a loan that offers 100% financing. Like I said before, it means that there is no down payment. Mortgage rates on VA loans can be less than those mortgage rates that are on conventional mortgages, but the applicants may be required to pay a one-time upfront funding fee depending on their disability rating with the VA. The loan program technically doesn't have a credit score requirement. So again, let me say that the VA itself doesn't technically have a credit score requirement, but most lenders do have a credit score requirement for this particular loan because they definitely still are in the business of, mitigating their loss with these, or their risk, I should say. And so lenders are allowed to set a minimum credit score requirement, and most of them use a credit score number of 620. So that's something that you want to keep in mind. And also you have to show when you're applying for a VA loan that you have what's called a certificate of eligibility. So you have to be able to show to the lender that you are eligible to apply for and receive this home loan from the VA. Now that I've explained some what I like to call basic tenets of each of the common loan programs, now we can kind of discuss some of the minimum credit score requirements. Now, I would like you to keep in mind that these are minimum credit score requirements as they have been set up by the specific programs, the people who are operating these specific programs within the government or lending institutions, and so they can change, and lenders also have a set of specific loan requirements that they're allowed to impose upon customers to be able to mitigate their risk for loss. So these are very basic and they come from the actual programs themselves. So if you are looking to see what your specific lender does as far as credit scoring as relates to these different types of loans, I strongly urge you to reach out to them to get that information. So with that being said, usually conforming mortgage guidelines state that a loan could be issued if an applicant meets a credit score of between 620 to 680. The 680 credit score is actually the minimum for requiring a conforming jumbo mortgage. So if you're not looking for a jumbo mortgage and you're looking to, to be getting just a conforming mortgage, if you're around 620 to 640, then you should be able to pass that particular aspect of requirements that the lender may need you to meet in order to obtain the loan. These loans usually also require 3% down, and like I said just before, other lender requirements may need to be met in order to secure the loan. For FHA loans, the minimum credit score is actually 500. That is set by FHA itself. You could get 500 if you have a 500 credit score and you have at least $500 down. Then you could be asking for the FHA loan, and of course you have to meet certain other qualifications in order to get the FHA loan at that minimum credit score. I'll be honest and very transparent and say most lenders are not going to give you a loan with a 500 credit score because they still have the responsibility of mitigating their potential risk with the lending. So while FHA says that is a good credit score, you would probably want to, I would say more often than not, be very much above the 500 credit score in order to be able to obtain the FHA loan and have acceptable terms. Now, you have to have at least a 580 if you're looking to put down between 3.5% to 10% of the purchase price on the home that you choose. As I mentioned before, FHA will give you up to 96.5% of the purchase price of the home that you choose. So we're just going to use round numbers here so that I can give you an idea of what that looks like. If you're purchasing a home for $100,000 and you are getting a not USDA, but I'm sorry about that. If you're getting an FHA loan, then you are going to, if qualified, receive $96,500 of that $100,000 that you need to purchase the loan. The other $3,500 that would make the loan amount $100,000 is what you would need to come up with out of your own pocket in order to secure the loan, or in order to make it $100,000 is what I'm trying to say. So that would be your down payment. And I'd like to interject right here and say that a lot of times people think, you hear, you know, closing costs, and you think that includes your down payment. Down payment, the amount that you would need for that and the amount that you would need for any closing costs, most times are two totally different things. So while we do have in certain areas, I can't speak for every state, but in a lot of states, at least the states that I'm licensed as an agent, they do have down payment assistance programs that you could, you know, qualify for. But that is a separate qualification from getting the major home loan, which would be your FHA, VA, USDA, or what have you. Now, when it comes to closing costs, you can also take some other steps that we'll discuss in just a bit. And so that kind of helps you to understand, you know, what you're looking at. Like some people, you know, they get a conventional loan and, you know, they're only going to get 80%, say, of, you know, what the loan amount is. So if you're using that same round number on a conventional loan, if, you know, the conventional loan is only going to give you 80% of the purchase price, if your home is $100,000 that you want to purchase, 80% of that would be $80,000. So in order for you to make the purchase, you would need to come up with the additional $20,000 that would be needed to make the $100,000 plus your closing costs. So that's just something to think about. I strongly urge everyone, if you are looking to purchase a home, you should do everything in your power to save as much as possible so that you can apply that towards any down payment or closing costs that you may need based on the loan that you qualify for and the situation that you find yourself in with regards to the seller and negotiations when you find the home that you want. You want to be prepared for that. I would tell people to save at least between 4 to 6% of the purchase price that they're looking to stay within, just in case, so they can cover as much of you know, of what they would need as possible as it relates to down payment and closing costs. So next we will discuss what terms are typically needed when you're ready to apply for each one of these loans. And I just said terms, but I meant items. What particular items would be needed for you to start the process to apply for these loans. Most lenders will require that the applicant provide the following items that I'm going to share, but please keep in mind that every borrower's situation is different and additional items may be required in order to adequately process your loan applications and make sure that you can get the approval that you're looking for to purchase the home. Most traditional lenders will ask you to provide the following information with your loan application. A completed loan application, which actually gives them permission to pull your credit report and see your score. You would need to provide your last 2 years tax returns. You would need to provide your last 2 months bank statements. You would need to provide your last 2 months check stubs. You would need to provide a state issued ID or driver's license and your social security card in order to, be able to apply for the loan and get the process rolling to obtain the loan. Now, usually if you have completed the loan application and you have met the preliminary lender qualifications, then you can be issued what they call a pre-approval letter. Usually the pre-approval letter will tell you as the borrower what the lender will loan you. So the loan amount. Some pre-approval letters also have the loan type on it. Will have the interest rate and the annual percentage rate. When you are working to get your pre-approval letter, you want to make sure that you're clear on all of those things and that the letter specifies as much of that as possible. So what your pre-approval amount is, what type of loan you're getting, what the interest rate is, and what the annual percentage rate is. You want to do that for multiple reasons. Number one, it helps your agent, if you're working with a real estate agent, to understand how they can negotiate the best deal for you. Secondly, if you need to make some adjustments in what you're looking for and you're wanting your agent or even your lender to keep you in a certain price point as it relates to your monthly mortgage payment, then this pre-approval letter with all that information on it can help those professionals to do that for you. And it can also help you. So you want to make sure that, when the lender gives you a pre-approval letter, that they can give you something that, has as much of that information as possible on it. I would also like to point out to you that if you're using USDA or VA loans, which offer 100% financing, this means that you don't need a down payment. But as I stated before, that does not necessarily mean that you don't have to come up with closing costs. So you want to ask your lender if that's something that you need to negotiate for, and figure that out. Your down payment and closing costs, like I said, are two separate things. And I just like to reiterate that you can negotiate with a seller or attempt to negotiate with a seller to try and get some of or all of your closing costs paid. If you qualify, you can also take advantage of any down payment assistance programs that may be available in your local area to help you with the down payment. And there are other things that you can do to help come up with the funds you need for closing and to help cover some of those costs. Those things really depend upon your situation. You should be very clear and transparent with both your agent and your lender so that they can help you to find the most creative ways and legal ways of doing that if you need, help with down payment or closing costs. While it is, not required in most states, real estate professionals strongly urge that you speak with the loan officer to determine what can be offered in terms of home financing before you set out on the path to looking at homes. A lot of times, buyers, they have, purchase fevers is a good way to describe it. With the advancement of technology and there being such ease at being able to look and see what type of homes are on the market and what the price points are, buyers can really get caught up in looking for things that they like and trying to and then they will work to try to move forward to purchase those things only to be crushed when they find out from their lender that they don't qualify for the type of home that they were interested in. It can save you so much time, heartache, and hassle if you would just go and work to get your pre-qualification so that you know what you're working with before you even start the process of looking at homes. If you're not sure what to do to get started, you can contact a loan officer. You can contact a real estate agent. You can find those types of professionals in the same places that many people look at homes, prefer, like Zillow, Realtor.com, sites like that. If you can find real estate agents on there that are qualified to help you. I can tell you that no agent can be on, say, the Zillow.com platform or Realtor.com, Homes.com, any of those sites without having an active real estate license. And so you would be safe to pick a professional from one of those sites to call. A good professional will be honest with you and tell you, hey, I know this information. I'm not sure about this other information. Let me, reach out to someone or do some research to figure out the right answer for you. That is one of the biggest roles that a real estate professional, a realtor, plays on your in your transaction. They are actually advocating, for you to get the best deal possible based on their knowledge of your situation, their knowledge of the market, and their knowledge of the type of loan that you're getting. So if they're responsible and they have a fiduciary duty, to look out for your best interest at all times. And so if you need help in that area and you're not really sure where to go, you can go to either of those sites that I just mentioned and, find a reputable realtor. You can also call your local real estate board or go to one of their websites if you're in a place where your realtor board has a web presence, and find a professional there that you can speak with. Usually real estate professionals also know lenders, and they have relationships with certain lenders. So if they can, listen to your information or listen to your story, and then they may be very well able to quickly point you in the direction of a lender that could probably more often than not help you. So I did want to point that out. Taking the steps to determine, the right interest rates, the amount that you can qualify for, and all of that, like I said, is really cutting out a lot of headache and heartache for you. I'll be honest and tell you, most agents are not really keen on showing people a bunch of houses if they're not sure if that person can qualify. Most real estate professionals are not working by the hour, so their time is very valuable. And usually, a lot of times, sometimes people get offended when the realtor or the real estate professional, continues to ask them about getting pre-approved. But that's just their way of, trying to help you in the process. Once you reach out to them, they automatically assume that you're ready to move forward, and so it's their job to, do all of that they can do to help you in that way. So it's very important, that you take advantage of the information that comes to you from your loan professionals. If you have any questions or concerns, like I said, you can always go and search the information yourself. Again, I like to point out that the most reasonable definitions for these terms that I just mentioned and other information is spelled out in such a good way on www.freeandclear.com. So I'd like to take this time to say that, that is our lesson for today. And I hope that you can use this information in the near future to, have the best home buying experience possible. And with that being said, I'd like to thank you so much for joining me for this, our latest episode of A Lesson in Real Estate.